U.S. JOLTS job openings set to resume downward trend in September after August turnaround. The U.S. JOLTS data will be watched closely by investors ahead of the release of the October employment report on Friday. Job openings are forecast to retreat slightly below 8 million in September. The state of the labor market is a key factor for Fed officials when setting policy. The Job Openings and Labor Turnover Survey, JOLTS, will be released on Tuesday by the U.S. Bureau of Labor Statistics, BLS. The publication will provide data about the change in the number of job openings in September, alongside the number of layoffs and quits. JOLTS data is scrutinized by market participants and Federal Reserve, Fed, policymakers because it can provide valuable insights regarding the supply-demand dynamics in the labor market, a key factor impacting salaries and inflation. Job openings have been declining steadily since coming in above 12 million in March 2022, pointing to a steady cooldown in labor market conditions. In August, however, the downward trend halted as the number of job openings climbed above 8 million from 7.7 million in August. What to expect in the next JOLTS report? Markets expect job openings to come in at 7.99 million on the last business day of September. Federal Reserve, Fed, policymakers have made it clear after the July policy meeting that they are shifting their focus to the labor market, given the encouraging signs of inflation retreating toward the central bank's target. It is important to note that, while the JOLTS data refers to the end of September, the official employment report measures data for October. The upbeat employment report for September, which showed that non-farm payrolls, NFP, rose by 254,000, caused market participants to refrain from pricing in another large Fed rate cut at the policy meeting to be held on November 7. Assessing the recent employment data, Kansas City Fed President Jeffrey Schmidt argued that the labor market was normalizing after a period of record overemployment and untenable low unemployment rates, rather than an outright deterioration. The CME Fed Watch tool currently shows that markets are nearly fully pricing in a 25 basis points, BPS, rate reduction at the next policy meeting. Meanwhile, the probability of one more 25 bits per second rate cut in December currently stands at around 72%, against a 27% chance of a policy hold. In case there is a positive surprise in the job openings data, with a reading of it or above 8.5 million, the immediate reaction could boost the US dollar, USD, by causing investors to reassess the probability of a December rate cut. On the other hand, a disappointing print at or below 7.5 million could hurt the USD. Over the month, hires changed little at 5.3 million. Total separations changed little at 5.0 million, the BLS noted in its August JOLTS report. Within separations, quits, 3.1 million, continued to trend down, and layoffs and discharges, 1.6 million, changed little. JOLTS job openings. JOLTS job openings is a survey done by the U.S. Bureau of Labor Statistics to help measure job vacancies. It collects data from employers including retailers, manufacturers, and different offices each month. When will the JOLTS report be released and how could it affect USD? Job openings numbers will be published on Tuesday at 1400 Greenwich Mean Time. Eren Sengieser, European Session Lead Analyst at FX Street, shares his view on the potential impact of JOLTS data on USD. Unless there is a significant divergence between the market expectation and the actual print, the market reaction to JOLTS data is likely to remain short-lived, with investors refraining from taking large positions ahead of the third quarter gross domestic product, GDP, data and the October employment report, which will be published on Thursday and Friday, respectively. USD's near-term technical outlook suggests that the bearish bias remains intact. The Relative Strength Index, RSI, indicator on the daily chart stays below 40 and the 20-day simple moving average, SMA, continues to move away from the 100-day SMA after completing a bearish cross late last week. On the upside, 1.0870, Fibonacci 23.6% retracement level of October downtrend, 200-day SMA, aligns as key resistance. If USD rises above this level and starts using it as support, technical buyers could take action. In this scenario, 1.0930, Fibonacci 38.2% retracement, 100-day SMA, could be seen as the next bullish target before 1.1000 round level. Looking south, First support could be spotted at 1.0770, endpoint of the downtrend, before 1.0700, round level, and 1.0620, static level from April. What does the Federal Reserve do? How does it impact the US dollar? Monetary policy in the US is shaped by the Federal Reserve, Fed. The Fed has two mandates: to achieve price stability and foster full employment. Its primary tool to achieve these goals is by adjusting interest rates. When prices are rising too quickly and inflation is above the Fed's 2% target, it raises interest rates, increasing borrowing costs throughout the economy. This results in a stronger US dollar, USD, as it makes the USA a more attractive place for international investors to park their money. When inflation falls below 2% or the unemployment rate is too high, the Fed may lower interest rates to encourage borrowing, which weighs on the greenback. How often does the Fed hold monetary policy meetings? The Federal Reserve, Fed, holds 8 policy meetings a year, where the Federal Open Market Committee, FOMC, assesses economic conditions and makes monetary policy decisions. The FOMC is attended by 12 Fed officials, the 7 members of the Board of Governors, the President of the Federal Reserve Bank of New York, and 4 of the remaining 11 regional reserve bank presidents, who serve one-year terms on a rotating basis.
Friends, thanks for watching. Please subscribe my channel for more videos.